This is the second class of today. Looks like we might wrap this up a little bit earlier than anticipated. Um, so anyway, this part is where we're going to learn how to see what I call easy to see divergence before it occurs. Okay, so anyway, can everybody hear me and see me here still perfectly okay, or everybody's saying ready to go, ready to go? Okay. Um, Great. Everything's okay. Good, good, good. Let me go back to these questions now. Now, didn't get your email with the attachments yet. Well, I don't know. I sent it to. See, there's a couple people who didn't sign up on my list, so that could be you. I don't know. Um, so if that's the case, you're not going to get it. But anyway, that's why you never got it yet, Michael Solomon. Okay, and then we have another question here. What is the difference in your divergence trading and others? You mean than others, you mean, Victor? Okay, well, that's what I'm going to teach you here, okay? And we're going to go at it right now. And I'm going to first tell you guys, okay, well, for those of you, who didn't get it, okay, who didn't get the indicators, just send me an email to forextrendmaster@gmail and I'll forward it to you, okay? And no worries, it's going to be in the members area for you to download soon enough, so no worries, okay? Okay. Anyway, so what was I saying here? So what I'm going to teach you here first is how a lot of other traders, authors, people, whatever you want to call them, think they're teaching people how to see divergence, but in reality, they're not. Okay. So anyway, I'm gonna just make this little box disappear now. Okay. So I'm just gonna go into it now. Okay. What a lot of I'll tell you a little story here from back in 2007. A really good trader friend of mine. He comes from Nassau, Bahamas. He told me, he said, Jason, he said, all these damn dots and arrows and whatever. He says they don't work, and I kept saying, oh no, they gotta work, they gotta work. And he told me, he says, what you gotta learn is how to find, you know, divergence and trade divergence, and he he knew that this was the answer, okay, to becoming successful at trading, but even himself at the time didn't understand how to find it. He could only see it long after it happened, okay? So anyway, he told me about this, and I spent about, let's see, I don't know, about four months or so trying to find it on my charts, and I was looking at like stochastics and a few different indicators, MACD, and so on and so forth. And anyway, in all honesty, sometimes I would see it, sometimes I wouldn't. If I did see it, it was long after, and it was pointless and useless to me. And then it was back in, I think, 2010. Okay, another friend of mine, he was showing me, this divergence again. Yeah, it's right here and right here. He'd draw them all over the chart, just like I did for you guys, the last couple classes that we did. And, and he was drawing them from tops and bottoms and saying, oh, here it is here it is there. And, and he wasn't really explaining himself to me, how you find it. So anyway, he was leaving parts of the puzzle out, or he thought he was explaining it to me, but in reality, he wasn't explaining it. Okay? So even back then in 2010, I started looking at it again, trying to find it. And even though at that time I still couldn't really find it before it occurs, okay, it was like a year later, again he showed it to me and he said, this is what you look for, and this is what you look for, and this is what you look for, and I said, come on, man, that doesn't explain to me, how you see it before it occurs. So anyway, I just thought this person was full of it, and he really wasn't seeing what he was trying to show me. But anyway, what all these people fail to do is this. This is how they'll explain how to find divergence, okay, which is the wrong way. They'll say, okay, when you see a low and a lower low, he says you'll have, bullish divergence. When you have a high and a higher high, okay, you'll have bearish divergence. Okay, so I'm going to ask you guys, I just told you, okay, what all these traders teach people, okay? And I'm going to ask you, I'm going to open up this chat thing and I say, from what I just told you, does that explain to you how to see divergence before it occurs? By looking for low and lower lows or high and higher highs. Please tell me in the chat if that tells you. So far I got no's. No way to me. No. Right. And it was the same with me. Okay? It was the exact same deal where I was saying, oh, this is making me so mad, and it just wasn't explaining it. And it's like anybody can look for a low and a lower low, or actually a low and a lower low and a low and a higher low on the indicator is how they explain it to you. And now that I've said that to you, okay, does that explain it to you? How to find it before it occurs? Yeah, you need a little bit more definition. Exactly. You need a little bit more explanation, right? Right. Okay. So this is what I was saying to you guys last week, that after I'm going to fully explain this to you, okay, I want you to go on YouTube. I want you to go there and put divergence in the, in the search deal there, and and see what they say. But what they're going to tell you is you look for a low and a lower low and a low and a higher low on the indicator. You look for a high and a higher high and a high and a lower high on the indicator. That is all fine and dandy, but that does not explain it to, in perfect, explainable English, how to find it before it occurs. Okay, so I just wanted to go over that with you guys. Okay, Michael says, but yeah, explain it with trendline breaks. Yeah, for sure. Yeah, you can. Okay, and it might, some people might catch on to that. What we're saying here, but in reality, people really want to know long before it occurs what exactly to look for in the chart, what to do, and and so forth, so that you're not going to miss it. You're going to be like waiting there like an hour or a day, or depending what chart you're trading, or you could be there waiting 5 days or 7 or 10 days on a daily chart. Okay, so anyway, I just explained to all of you guys, I got to take a drink of water, the wrong way to teach you, how to spot divergence and trade it, okay? And it was really, I just have to say that it was really upsetting for me, okay, from 2007 until basically last year, when I really learned how to find it and see it before it occurs. And this guy that was telling me, okay, I'm not going to say his name. He's a good trader friend of mine. But anyway, I said, come on, man, you got to tell me how do you see it before it occurs? By you telling me it's a low and a lower low and then a low and a higher low in the indicator, that doesn't tell me. And then he said it again, and he said it again, and I got mad with this person. Then finally, he goes, oh, I see what you mean, and he explained it to me. So now I'm going to explain it to you guys. And once I explain this little tidbit that he left out with me and I explain it to you, okay, you guys are going to see it so much easier and long before it occurs. Okay, so now I'm going to remove this little chat box here now that I asked you guys if that was, a good explanation of it or not, okay? So anyway, so we're on the 4 hour here, okay? Okay, so now I'm just going to, just for this sake, just to show you the trend, I'm going to blow it up a little bit so you can see it a little bit better. But really, I like to find the divergence using this chart size, okay? So we'll make it one step bigger. Okay, so right here, okay, as you guys know, we changed trend, right? So we're going in an uptrend. So when you go up when the market is going up, I want all of you guys to now make this part of your trading where you're going to concentrate on what I'm about to tell you. And what I'm about to tell you is when the market's going up, okay, this is easy. This is the easiest divergence to find, what I'm going to show you today, okay? When the market is going up in an uptrend, okay, what I want you guys to look for is for the market to put in a high, okay? Once it puts in a high, then you want it to retrace, okay? And when it starts retracing, then what I want you guys to start thinking is, hey, now that it's retraced, okay, is it going to put in a higher high, okay? So right here, okay, it put in this high, and then it put in a higher high, okay? But I also want to show you there was divergence right here, okay? And let me show you what it is, okay? So you had, when the market changed trend here, okay, you had a high and then a higher high, but you can also use this high, okay, and this high, which is a high and a higher high. Now, if you would have used this high and this high, okay, now watch, like this, okay, and you drew it from here, that's not divergence, is it? No, it isn't. But if you remove this sucker, okay, and we take this one, come on, highlight for me. Oh, it doesn't like to. It's hard to click on this. I don't know why. But anyway, as you can see, right here, we have a high and a higher high. On the indicator, we have a high and we have a lower high, okay? So that is divergence, okay? So now, if we're going to trade this using a trend line break, okay, you would have drawn your trend line from the swing low right there to there, okay? So it did close below the trend line right here. Let me blow this up now, okay? So if you would have got in this trade and you would have put a 20 pips above here, that'd be 77 pips stop. A 77 pip stop, okay, it only went down 34 pips and it went the other way, okay? So they faked you out on that one, okay? But as you know about my money management is basically, you can play it a number of ways where if you hit 50% of your target, you're going to move your stop to lock in 1 pip, okay? So when it hit 35 pips down there, you could have moved your stop and locked in 1 pip, and it would have been a break-even trade. Okay. So anyway, let's erase this now, or well, actually no, we'll just make it smaller. Okay. So that's how you find divergence before it occurs. Is that when the market? I'm going to repeat myself again. Okay, and I'm going to repeat myself again and again till you guys get this. Okay, and I'll be doing this throughout the whole 20 days that we're going to be here every night at 6 o'clock when the market is open, and we're going to be what I call continuous learning, and I'm going to keep driving this into your guys' heads until it's embedded in there, okay? And once you have it embedded in there, then you're not going to forget it, okay? So the key to finding divergence before it happens is You're always thinking in your mind, when the market's going up and it puts in a high, then it retraces, then you're waiting for it to put in a higher high, okay? Because you need a high and a higher high and a high and a lower high on the indicator to get into the trade, okay? So this trade didn't work out here, okay, but then the market continued higher, didn't it? So you're still thinking again, okay? Remember that when the market's going up, okay, not only are you thinking, okay, when's it going to put in that high and when's it going to retrace, and then when's it going to put in the higher high, but you're also thinking the opposite of what the market's doing, okay? You're not thinking about buying the market when the market's going up, okay? You're thinking about selling it, okay? This is a counter trend strategy, okay? The other two strategies that I showed you last week, they're basically with the trend. Those are entries after the divergence occurs, okay? Let me get a drink of water here again. So let me blow this up here a bit to show you this. So as you can see, okay, the market, well, first let me go back to this one, okay? So when it put in this high here, okay, we had 1, 2, 3, 4, 5, 6 candles. Actually 7 candles, okay, 7 4-hour candles. So that's 28 hours. We knew right from when this wick was created that we were waiting for this setup to occur, okay? Because, like I said, when the market's going up, you're waiting for it to put in the high, then retrace back. Once you see that, and you'll see a bearish candle, okay, or it's a big long wick on it, you know that all that you're waiting for now is for it to make a new, fresh, higher high, okay? So however many candles, you knew right from this candle that you're looking for the divergence to set up. So you had all that time, okay? And again over here, once the market started going up again and put in this high right here, okay, right after this little bearish candle closed, you knew right there that, okay, maybe this is setting up again, okay? So now what you're waiting for is for it to make a new higher high, which it did right here, as you can see. So you had 1, 2, 3, you had 4 4-hour candles, okay, that's 16 hours, okay? So then you can draw the trend line right from the very bottom swing low, like this, right across, okay? You could do that. Or you could do the minor trend line, okay? So this is our major trend right here. And then we're going to put our next trend line like this, okay? So right up here, ladies and gentlemen, we had a high and a higher high, right? But on the indicator, we had a high here, but a lower high. And I know this one is hard to see, okay? What I also want to mention to you is the best setups that you're going to find are when you're going to find it go from positive on the OSMA, okay, to negative, and then positive again, okay? But in this particular situation right here, that did not happen, did it? No, it didn't. So you got to like sometimes make the chart a little bit bigger, okay, and look at the indicator to see, well, is this divergent or not? So let's bring up the crosshair now, and I'll line them up. As you can see, this one lines up with this one, and this one lines up with this one. So you got a high and a higher high, and you have a high on the indicator, but a lower high, okay? So if we were going to take this trade, okay, let's move this back here, using the minor trend line, which is right here, okay, but it's also a swing low too, but the major trend line would have been there. This is the minor. You'd have entered short right here on this candle, okay? See how this got you in the trade long before our Fibonacci setups and trade line pullback setups, as you can see. that happened over here, and it always will because, it's divergence. It gets you in near the tops and near the bottoms. So you would have got short right here on the open of this, right at the opening of the week. It would have been the first 4 hours of the open of Sunday of this week, okay? Your stop would have been up here about 60 to 70 pips. You got that 70 pips, and within 12 hours, it hit your target, okay? If you were going for 2 to 1, you would have got it down here within a day or so, okay? So, like I said, when the market's going up, I'm repeating myself again, don't get annoyed with me. When the market's going up, you're waiting for it to put in the high. Once it puts in the high, and then you see it retracing, then you see some bearish candles, you already know right here, okay? You already know that you're not going to be buying this thing. You're going to be thinking the opposite of what amateur traders are going to be thinking, and you're going to be thinking, I'm looking to sell this puppy, okay? I'm looking to sell this baby, not buy it, okay? You already did, Then again, okay, but with this situation here, I got to mention this now, that there is one of our trades right here, okay? I have too many lines in the chart now. Holy jeez Louise. I hate cluttering up the charts with all these lines. Hold on a second. Okay. Let me remove that for a sec. Right here is one of our trade line pullbacks, okay? Let me put it to there. So you would have got in 1 pip above this, and it shot up like 50 pips. Your stop would have been about, 25, 35 pips. So there was a trade there, okay? But a lot of times there might not be a trade, okay? But anyway, that's how you find divergence before it occurs, is that when the market's going up, okay, you're waiting for the first high to be put in, then it retraces back, then you're waiting for the new fresh higher high, then you can draw your line on your chart from your high to your higher high. Oh, and very, very important, listen to this, very, very important. When you're looking for divergence, first, okay, I want you to look for this on the chart, not on the indicator. There are so many people that they teach them that you look for the divergence first on the indicator, then on the chart. It's like, no, that is backwards, okay? You're always going to be first and foremost concentrating on the candles, on the price action of the chart, okay? So that's why you're looking for that first high to be put in, then it retraces, then all this time you're sitting here waiting. You could come back every 4 hours and go, okay, did we get a new higher high yet? No, we didn't. Did we get one here? No, we didn't. Did we get one here? Yes, we did. But then it took another 4 hours for this candle to close down here where you could actually see the setup and get ready to go short. Okay? So let me get a drink of water. Oh, okay. Talking too much here. Sorry about that. So now, okay, that was bearish, easy to see divergence right here and right here. Now, let's go and try and find the bullish divergence, okay? So, when the market changed trend, and it did right here, okay, I taught you exactly how to know when the market changes trend without any silly indicators that are going to lag and tell you some fairy tales, okay? Right here, we knew the market change trend, okay? So what are we now going to concentrate on that the market's going down, okay? We're not looking to sell the market, okay, when we're trading this divergence, looking for this divergence. We're instead looking to buy it, okay? So what I want you to totally concentrate on is when you recognize the down trend, a bearish trend, I want you to be thinking bullish, bullish, bullish. I want to buy this baby, okay? So, what are we first looking for to happen? Is for the first low to be put in, okay? Then, once it starts to retrace, okay, what are we looking for then after that? I know you guys know the answer. We're looking for a new lower low, aren't we? Yes, indeed. So here's our next new lower low. So when you find the low in the lower low, okay, then you take this and you'll draw your line, okay? You're going to see that at first, okay, you're going to draw these lines in the chart from your low and your lower lows and from your high and your higher highs, okay? But after you keep practicing this and practicing it, you'll notice that after so much time, you won't even need to draw these lines in the chart or on the indicator, okay? You'll be able to spot it with your eyes. And the only line that you will have to draw on the chart will be the trend line, where you're going to look for price to break it to enter the trade, okay? So when we use a trend line as our entry point, okay, I just want to first say that this is our safest, okay, point of entry, okay? I'm going to teach you guys another way, another entry, but I'm not going to teach it to you today, okay? Because I want you guys to just learn this part here first, okay? Because this is how I'm going to slowly, gradually ease all of you into this divergence from the easiest part to the hardest part, okay? And the hardest part is the hard to see divergence, okay? But once you learn and master the easy to see divergence, and then you master the double top and double bottom divergence, then after that, then, it will take a little bit of time, I'm going to be honest with you, but you'll be able to see the hard to see divergence as well, known as hidden divergence, okay? So anyway, back to this now. So now that the market's going down, okay, we're looking for our first low to be put in, and then it retraces back up, okay? We had all this time, we were waiting, so we were waiting on this candle, this one, and this one. Finally, it put in the lower low, okay? But once it put in the lower low, on the indicator, it wasn't divergent, okay? So if you take it from here, and you draw it to here, I think it is, it's not divergent, okay? It's basically followed what price did. In order for it to be divergent, okay, this needs to be like this, okay? We don't have a low and a higher low on the indicator. So there's no divergence here, okay? But then, okay, as time went on, what happened over here, okay, so this here, there was no divergence, but as all of you know, there was our Fibonacci trades in here. You see, that's what's so great about this whole thing, is that when there's no divergence, you guys can look at, the power of the Forex Trendmaster methods to get in along the way and make some pips along the way, because they are basically pullback entries, with the trend. Okay, so anyway, let me get another drink, sorry. So we didn't have the bullish divergence here from a low and a lower low. So then we came down. So now we're thinking again, oh, when's it going to put the low in here? So it put a low in right here, didn't it? Yes, it did. Then it retraced up, and it retraced up, and it retraced up. Right from this candle right here that closed here, we had 1, 2, 3, 4, 5, actually 6 candles, if not more, maybe even 7. We had 7 4-hour candles in advance telling us, we're not selling down here. We're not suckers anymore. We're looking for the divergence. And the reason, okay, the whole reason let me put it this way. The only reason that I've been able to figure out, put any common sense to it, why does these divergence setups happen all the time, over and over again, at the tops and bottoms of moves? Well, the only reason that I can think of is that they went and they got the stops. Okay? So, like I told you over here, it put in this high, okay? People started selling right here, okay? So what happened to them? Well, they took it up and they took out their stops. That's what they did. then they whammed it down, right? And it's the same thing right here. People, there's a reason why the market went up here, and we have some bullish candles. We have bullish candles because it was because people were buying it, right? Right. And if they weren't buying it, then they were short covering and taking profits from this long run down. Because when people get out of their shorts, the market will go up. When people are getting out of your long positions, the market will go down. Okay, along with some buying momentum with it. Okay, that's just the way the market works. That's why the markets have their natural market flow of higher highs and lower lows and lower highs because of that, because there's always people taking profits in the market. Okay, so anyway, let's get back to this now. So that is my sole reason that I know of why you'll see a low and then they'll come down and make a lower low at the bottom of a move, or a high and a higher high at the top of a move, because they go and the dirty buggers go and get the stops, okay? And there's people who went long right here thinking it was going to shoot right back up again, and sure enough, what did they do? They came back and they got their stops. They got them right there on this bar, and look how quickly, okay, it shot back up and created this pin bar. Why did it do that? Because they took out all these people's stops. That's why. Okay, so let's put this right back on here. Right on here. I'm not right back on here. Right on here. I never put it there yet. Hello, Jason. Come back to the chart here. Okay, so we have a low. We have a lower low. I'm going to repeat myself again. When the market's coming down, you're waiting for it to put in a low, then retrace back up, and put in a lower low, okay? So now that we've found this, okay, and right here, let's say we were right here, okay? This did not exist yet. We were right here. So you take this sucker, you line it up right there to right there, I believe. Let's see. Yeah, right there. Yeah, and right there. So as you can see, this is a good setup, but it's not as good, more often than not when you have positive, negative, positive, okay, to sell. They're much better than just, being in the positive part of the indicator or being in the negative part of the indicator. You can see what I'm saying. If it would have been more of a spanned out move here, where it would have been negative, then some positive, and then negative again, okay, if you're following what I'm saying, because it's the opposite of this one over here, okay? So think of this blue down here, okay, and this orange and red being up here, which would be blue, okay? So that's where you would have negative, positive, negative. So anyway, right here was our divergence to buy, okay? So you would have got long, okay? So now if we're using the trend line as our tool, okay, there, right there. When did it break it? It broke it and closed above it. Now, that's another thing I want to tell you guys is that, you don't want to just get in on this on the break of it, okay? You want to wait for it to close, okay? If it's too big of a candle, and you're saying, oh, that's going to create a much bigger stop, because you're going to be getting long right here, and you're going to have like a 100 pip stop. Some people, they might not be too keen on doing that, okay? But the reason why when we do the trade line pullbacks, we're not waiting for the candle to close. We're jumping in on it right here, okay? But with the divergence, okay, we don't know for sure if that, is going to break it and run. So it could just create a long wick here and close back down here. It'll be a pin bar and they'll take it lower. So you want to see candle formations. You want to see pin bars. You want to see bullish engulfing, changing trend, and breaking and closing above this major trend line to get into the trade. Okay? I hope everybody understands that. So on this particular trade, okay, you would have got in long right there. It went up just 66 pips so far. It could still go up 100 pips and have your 100 pip stop here. Okay, and that's pretty much it. Now let me see if we have questions here. Okay. Yes, I'm going to be recording those 20 days, Gerald. Definitely. So you guys will always have access to that in the members area, and you can go back and look at it. We're going to be looking at trades that are going to be happen that day, like on the 15-minute. We're going to be looking at the 4-hour. We're going to be looking at the daily, okay, and we're going to be looking at all those setups. And some of them might be happening right there, right now. Let's do it, okay? So anyway, I explained this now in a way. I repeated myself about 10 times, telling you that when the market's going up, you wait for it to put in the high. Then once it starts to retrace, you know right then and there that you're waiting for a new higher high. You know long time in advance when it's going to set up. When the market's coming down, you're waiting for it to put in a low, then a lower low, and you know from it retracing up, you have all this time, okay, right in here to wait for it to set up and get into the trade. Now, I want to ask all of you, did I explain this to you where you understand it and can see it before it occurs? Please tell me yes, no, hooray, maybe, yeah, I don't understand. Nobody's typing anything. Oh, I got to move the thing here. Hold on. Oh, okay. Okay, now I see them. Sorry. Yes, yes, yes. I think so. Yes, sir. Yes. Brilliant. Brilliant. Okay. Yes, plus I see other trade setups. Okay, cool. Clearly, thank you. Okay, yes, got it. One more example. You want more examples? Oh yeah, we're gonna look at lots more examples here yet. I'm not shutting this down yet. So you understand the easy to see divergence. Great, great. Is there anybody here that doesn't understand it? Oh, Fritz says you don't understand it. Not really. Well, I repeated myself 10 times, Fritz. You know, when the market's going up, you're waiting for it to put in a high. Then when it starts to retrace, you're going, okay, this is going to set up. You're waiting for the next higher high to be put in. You find it, you draw it, you trade it. Maybe you can watch the video again, Fritz, and see it again. If there's someone, maybe a couple people here that, that truly, no matter what I teach in here, you don't get it, I'll even, just to show you how good of a guy I am, and I want all you guys to be successful here, I will even go out of my way and do a one-on-one on you, like with this webinar thing here, and try and teach it to you. And I'll even let you ask me questions, like I'll open up the thing, okay? But to me, it looks like 99% of you got it here. It's not hard to see. Will I write this up somewhere? Yes. All of this, of what I explained here today, it's all written in a manual that you're going to be able to view inside the members area after next Saturday's finish of the class. Okay? It's not there now because it shows the double top and double bottom divergence. Hold on. Sorry, talking so much here, my throat gets dry. And it's cold here in Canada, and it's really dry, cold weather, so it's easy to... Hold on a second. Doing lots of talking here. Okay, I should be good now. So anyway, what was I saying here? Don't tell me I forgot. I forgot what I was going to say. Geez, I'm getting too old here. But anyway, we're going to... Oh yeah, it's going to be all... the reason why I'm not putting the manual in there yet, because I want you to learn this first, okay? I just want you to learn it. The easiest part first, then you're going to learn the double top, double bottom. Then you're going to learn the, yeah, one sec, Fritz, I'm going to get to you. Then you're going to learn the hardest part. So Fritz is saying he doesn't understand the part of the indicator. So it's the opposite. Okay, when you have something diverging, okay, one's diverging one way, one's diverging the opposite. Okay, Fritz. So let me show you here again. Okay, right here. Okay, you have the high and the higher high on the price chart. Okay, and then you have a high on here, but you have a lower high. So you see how, let me show you. So this is going like this, and this is diverging this way. Okay? That's your divergence. It's always got to be the opposite on the indicator. Okay, Fritz? And it's the same up here. You're going to have it, for going the opposite. You're going to have, again, you're going to have one go like this to go bullish, okay? And then on the indicator, it's going to be the opposite, okay? In the manual, okay, it's going to show you diagrams of exactly what to look for, okay? And actually, I'll even send you guys a picture of that. That's the one thing I want you guys to be able to print out and have it beside you so you can see the divergence, okay? So you can match it up. It's kind of like one little cheat sheet thing, okay? This is the one thing that I will send you guys after I finish teaching you all the 3 different divergences, okay? And that's it. That is the question. Okay, so did you get the answer now? Do you want to have swing highs or lows on the indicator? On the indicator, it's going to show valleys and peaks, okay? You draw them from the peak to the peak, or the valley to the, the valley to the valley. But sometimes you're going to draw them just on the positive side of the indicator and on the negative side, okay? Does that answer that? I hope. Tom says, do you ever look further back to previous highs in distant past to see if there's divergence with the current high? Well, that's a good question, you see, because if you go back too far, okay, they're just not valid anymore. I don't know exactly, how many candles you want to count and say, well, is this legitimate or not? I would say no more than 15 to 20 candles that you want to draw them from, okay? Yeah, I know there is no valley. I already told you that, Fritz. I explained it to you that sometimes you're just drawing them on the peaks and on the on the negative side, okay? Yeah, you can, Jesse, combine them together. But like I told you, the first when you're looking for these trades, okay, first you're going to see the divergence, then you're going to see the pullbacks, and then the Fibonacci, okay. Yeah, okay, Fritz, no problem. Yeah, so you can, Jesse, combine them. You see, the divergence is your ultimate point to get in from the top, and then if you miss that, okay, then along the way, then you'll be looking for the trade line pullbacks or the Fibonacci pullbacks to get in. Okay, yeah, okay, great. So let's go and look now at the 15-minute chart. Okay, there, I got rid of that. And I'm going to go and show you guys some setups now. Oh, okay. Yeah, I see what you're saying, Norman. Yeah. So Fritz, like I was saying, let me just show Fritz this quickly here. So in order to see if they line up, Fritz, like this one, okay? Here, let me show you. Let me make it bigger. Okay. So we drew our line, okay? This is for Fritz here, like this. And then you find it right here like this. So to make sure that, you know, that they're lining up, you can use these lines here, okay? Here's another one right here, okay? Like this. And like this, okay? Goes to there, I believe. And you just use these lines. Yes, that is another trick to finding them at first. Yes, like that. Anyway, like I said, Fritz, they're not always peaks and valleys. They're sometimes just, you know, using the top of the peak or from the bottom of the peak up. What about double or triple divergence? What's double or triple divergence? You mean where you have a high and oh, I see what you mean. A high, yeah, that happens times too. I wasn't going to show you that, but yes, that definitely happens. Like right over here, I think you're talking about. Right there. Okay, look at that. There's even, look at how many that is. See, right over there, you got 1, 2, 3, 4, all these points. Is that what you're talking about? Where did that go? Michael, is that what you're talking about? Yeah, that happens as well. Yeah, I know. How you know it really turns around? Yes, yeah. That's why you're going to use your trend line, okay? You want it to break the trend line. But sometimes, okay, even though you use a trend line, it's not, nothing's perfect, okay? There's going to be losers. There's going to be times where they keep coming to get you. But there's a fatal flaw in here, okay? And I'm not going to show you what that is until next week, okay? And I told you about that on my website, that there's a way to avoid it, okay? But if you use this fatal flaw, I guess you could say strategy, to avoid getting, caught, going long and then they come back and get your stop, you're going to stop doing, one type of divergence. So, but I'll explain that to you guys next week. Okay. So anyway, how do you know it will make a new high low after you retrace? That's what I'm saying. So nobody knows. If that's what I was just talking about, that you don't know if it's going to come back and make a new lower low or a new higher high. You don't know. Nobody knows. But that's just the way the trading game is. You don't want to like buy high and sell low. You want to buy low and sell high. So in order to do that, yeah, you're playing the odds. You're playing the odds, but believe it or not, Victor, okay, this works at least 70% of the time. When you're going for a 1-to-1 win-loss ratio, okay, it works 70% of the time. So if you win 7 trades out of 10, you're ahead. You're making pips, okay? There's times where it can work 8, 9 times out of 10, okay? But it definitely works 7 times out of 10, okay? And there's not just this type of divergence. There's also double top, double bottom, and the hard to see divergence, okay? Which I'm going to teach you guys all about that next week. So anyway, I hope that answers all the questions here. And I'm going to go and show you now on the 15-minute time frame some of the setups that happened this week. I showed you all the ones that were happening on the 4-hour. Now let's go take a look on the 15-minute. So I'm just going to remove this box here. Also, this guy's saying, yeah, and you got to use, yeah, exactly, resistance and support and resistance, to make your decisions as well. Exactly. Okay, so here is the 15-minute time frame. Let's take a look at the setups that happened this week. I myself, I don't use these white charts. I use black charts, so it's kind of like hard for me to see, but anyway. We basically had no divergence up here. Okay, it opened up Sunday, came down. As you can see, what are we looking for when it's coming down? We're looking for a low and a lower low. Okay, well, if you would have drew a trend line on here, it didn't really break this trend line, so it kept coming down. Okay, but we did have divergence right there. Can you see it? You draw it from there to there, and from there to there. Okay, but it didn't break the trend line. It just kept coming down, coming down, coming down. So then, once it finally broke and changed direction, okay, it's from over here. There's your divergence, okay? And there's your, your triple kind of divergence happening. It doesn't have to be just, negative, positive, negative. It can go a few times, okay? So if you use a trend line to get into this trade, okay, and you took that from way up there like that, let's say like right there, so you would have entered long right here, okay? Your stop would have been like about 30, 35 pips. It only went up 15 pips and went sideways, okay? So it went basically half of the distance, okay? Then we had more divergence. So now that the market's going up, okay, now we're looking to sell. So we're looking for a high and then a higher high. So as you can see, it retraced here. We knew right from this high right here, and it retraced down here. All that we were waiting for is the higher high. And did it happen? It certainly did. And at the same time that you're looking at that, okay, look down here. You had a nice high on the indicator, but it was failing to make higher highs on the indicator, right? So we had a high and a lower high on the indicator, okay? So there's our divergence to sell, okay? So you would have drawn a trend line right from this swing low right here. You got to find the second point. It's right there. There's your second point, and it bounced off it right here and went up. So right here, when it closed below this trend line, okay, you would have got short right from up here. Your stop would have been very, very minimal. Went down 73 pips to there, 100 and whatever down to here, okay? There's also hidden divergence in here, but I'm not going to talk about it today because I want you guys to concentrate. All this week, I want you guys to concentrate on finding easy-to-see divergence, okay? So, again, the market is coming down now. What are we looking for? We're looking for a low and a lower low. So it happened here, okay? But look, it wasn't divergent. Well, it kind of was. Actually, it was divergent here. Let me show you. Here's a low and a lower low. And here's a low and the lower high in the indicator, okay? And even when it's up in the plus side, like up here like this, that's still considered divergence, okay? It doesn't have to, when you're buying, it doesn't always have to be a low in the negative. It can be up in the positive, okay? And the same goes true when you're looking to sell. It doesn't have to be up here in the positive. It can be down here in the negative, if you see what I'm trying to say. So anyway, as you can see right here, it just went up, and it just went straight back down again. So you never would have got long in there, okay? So anyway, then price came down. We're waiting for a low and a lower low. Well, this is the end of the trading day. You wouldn't be trading then. But when you take it from here all the way across, you'll see it setting up, okay? You'll have all this time, hours and hours, like 5 hours, and boom, right to there. There's your divergence. So now what you need is you got to take it from one of these swing highs like this, okay? So now that you got that trend line, you're waiting for it to break it. So finally broke it way over here, okay? And it went up about 43 pips, He had about a 40 or 50 pip stop. So it worked out, okay? Now again, okay, we're looking for that now that we did this trade here and it went up, what are we looking for? We're looking for the opposite now. Now, for those of you who don't use a take profit, okay, you can also look at the opposite of, of what's happening to get out of your trade. So if you're long from bullish divergence and you see bearish divergence setting up, it's like, hello, hold on here. What's going on here? I better get out. So you may want to get out of your trade if you're still in it. So right here, the market was going up. What were we looking for, ladies and gentlemen? We were looking for the market to put in that first high. Then it retraced, right? Then it came back down. All these candles in here told us, wait a minute. Is it going to put in a new higher high? Yes, it is. So, sure enough, it put in the higher high. So right up here, okay, you could be saying to yourself, well, we're at this, 29 level right up here, okay? It now has bearish divergence. Hold on a second, got to get a drink of water. Sorry, ladies and gentlemen, I'm just so dry. Holy jeez Louise. It's dry here in Canada. Okay. Holy jeez. Okay, so anyway. So as we knew right from this candle, right, that, okay, maybe there's something setting up here. And sure enough, there was. It did set up right there. There's your high and higher high. And right down here, you draw them up. Look, there's your low. There's your high on the indicator, okay? But went to a higher high on price, but on the indicator, actually it's right here we're drawing it to. Okay, but on the indicator, it was a lower high. So that is divergence, right? Right. So where do we draw our trend line here to get in the trade? Well, this one has a nice, you'll be able to see these trends so easily after a while. You'll see, I know it looks a little subjective to you right now, but trust me, you're going to be able to spot them so easily. So, if you were to draw the trend line just like that, okay, look what happened, okay? It came all the way down. They bought right off the trend line again, took it right back up. Again, okay, this time it went through it, but it still closed above it, went up it, went up it, went up it again, okay? So went up here almost, and they almost, for the people who got short, they almost went and got their stops again, okay? It wasn't till way over here where you actually got a big, nice, strong close below this trend line that they kept buying off of, okay? But this was not the time to trade either. This was the end of the day. It was like almost the day was over. But look, it did a better move then. It shot down about 48 pips than it did over here all day, okay? So anyway, that's why, you want to use trend lines, because if you don't and you jump in prematurely, they're probably going to take it down to the trend line. They're going to buy off of it or sell off of it, and you're going to be going, oh, shit, I'm in this thing, and I shouldn't be, and it didn't break the trend line yet. That's why you want to use trend lines as your main tool to get in your entry tool. Okay? So anyway, that trade happened. It went down. You would have got, you would have got in here. You would have had like 30, 35 pip stop. It went down. You hit your target. You got your 1-to-1. Okay? So then, what were you thinking when the market was coming down? You were thinking the opposite. I want to buy. I want to buy. I don't want to sell. I want to buy. You got to be thinking to yourself now, when the market's going down, you got to be thinking buy. When the market's going up, you want to be thinking sell. And what else you want to be thinking is, when the market's going up, you want to be thinking high, then wait for the new higher high. When it's going down, you want to be, you want to be thinking low and new lower low. Okay, so all the suckers can sell in here and then get their buy down here or sell or whatever, and then they're gonna it's gonna go the other way on them. So okay, here we go again. So we put in our low. We had all these candles in here, all these beautiful little candles in here to tell us, oh, this is about to set up. And sure enough, it did right there. Low and lower low. Then we got the low of the valley, but the higher low right there. That is divergence. Yes, indeed. So you want to take right from the swing high down like that. Here's your next point, your second point where you draw your trend line right here. Okay, right here was our closing bullish candle above our trend line. We definitely changed trend right there. Okay, but we had this psychological level of 2850 there. To me, these levels are very important, okay, and that's why I gave you guys this indicator, and I hope you use them if you're going to day trade on like a 15-minute chart or even a 5-minute chart if you're going to go there. I don't trade divergence on 5-minute charts myself, but I trade other scalping methods like on a 5-minute chart. So I myself, would have got long. I wouldn't have been trading at this time. This is the Asia time, but if you would have got long, okay, you would have wanted to see it break this here. So if it broke it there, I would have got long here. Okay, so my my stop would have been about 50 pips. Would have went like 12 pips in my favor. Would have came down, give me a little bit of a scare, and then it went up, right? It would have gave you your pips that you were looking for. So that was that. So now as the market's going up, what are we looking for? Well, we're looking to sell it, aren't we? So we did have divergence up here, okay, but it didn't go anywhere. And I'll tell you why it didn't go anywhere. Because this was there was a news. There was some powerful news that wasn't really powerful, but anyways, there was some news on Friday. What was it? It was the trade balance that didn't do nothing. I don't know, but the market went sideways and didn't do much. So anyway, if you did get short, you would have took it right up like that. See? Swing low, your second point right there, okay? It broke the trend right here. So if you would have got short right there, well, the most you would have got is like 12 pips. You had a 15 pip stop. But anyway, it didn't go anywhere. It turned into a bad trade, okay? Here's a trade right here. I actually did this trade, okay, on Friday, yesterday, right here. We have, now that the market, changed and started going up, I was looking to sell. So we had a high, and this happened in the UK session, and then this higher high happened right in the US session. So you put your line right there, okay, and right there. Look at how easy that sticks out like a sore thumb, right like that. So I myself, okay, I got short right here on this bullish candle. And sure enough, it went up 15 pips. Freaked me out a little bit, okay, but I had my stop up here in a good place. And it came down, and because it was Friday and I didn't know what was happening, I actually took it right there at that 29.50 level. So I made like 19 pips on that trade that day. And that's pretty much it on the 15-minute. Let me see now. So what do we got in here? What time frames do I trade? What's this playing the odds again? Didn't you already say that before, playing the odds? It's not playing the odds, man. I look at the 15-minute, the 1 hour, the 4 hour, and the daily. I could show you the hourly too. It's really good. So when you get in a trade and more or less just goes sideways, how long do you stay in? Well, you see, this is another thing, is that everybody knows that the best time to trade, okay, is when these setups occur are when the market's moving, which is, you know, between 3 o'clock in the morning and 6 o'clock in the morning, my time, and between, you know, 8 o'clock in the morning and 11, 12 o'clock. Okay, but that's my time. That could be different times for all of you guys. Victor, I also want to tell you I don't look at the 30-minute time frame. I just don't like that time frame. Okay, and I don't see good divergence spotting up on it all the time, but there is divergence on the 30-minute. It's wet in the UK. Okay. Anyway, let me quickly show you now. Let me erase this chart, and we'll go to triple D. Oh, there's the black chart. Okay, hold on. Let me go back. Where's the white one? There's the white one. Okay. Let me show you a couple of quick setups on the hourly here now. There was only a couple of them anyway. Right here, okay? So the open of the week, the market was going down. We're looking to buy, right? Okay? We had a low and a lower low here, okay? But it didn't set up. Divergence was not there, okay? Then we had a low here, and it retraced back up, and then put in this lower low right here. So, was this divergent? Okay? It was if you drew it from this one to this one, okay? So, it wasn't from this one, but it was later on. You would have saw it from this one, okay? From there to there, and from there to there. Now, we'll wait for a trend line break. So you draw it from the swing high. Here's your first, second point that you need to draw it to, okay? Draw it. Sometimes you might want to pull it in a bit from the wick, but anyway, so if you put it in like that, okay, see right there, came up to the trend line, sold off. So you would have got long right here on the opening of this candle, okay? There was about a 40 pip stop, and it went up 45 pips, okay? Then divergence set up again, okay? Come on, click for me. Here's a low and a lower low, okay? And there was no divergence to sell here, okay, at all, okay? And then we got it right here. Come on, highlight. There we go. Oh, no, see? That wasn't divergence, okay? It looked like it was, but it wasn't. Why wasn't it divergence? Because they're both going the same way, okay? But if you really wanted to cheat a little bit, okay, and you take it and you draw it over here like this. I don't usually like to do it like that, but if you did, well, sure enough, there was divergence. Okay, so we have our major trend line, okay, something like that, okay, and then we have a minor trend line like this, okay. So, if you would have done this trade, you would have got long right here. It would have went against you 22 pips. Your stop would have been about 50, and it came up 84 pips to there and about 124 to there. Okay? So, I myself don't like to do that, to draw them like where other candles made lows, like in between them. But some people do recognize that as divergence, because it did put in a low, and it did put in yet a low and even a lower low right there. But on the indicator, okay, it did not. It did not put in a lower low on the indicator. It was a higher low. So they would classify this as divergence. Easy to see divergence. Okay. And as you can see, hold on, guys. There's another one, just like the other one. I do see it right up here. Now that the market was going up, what were we looking for? Right here. We were looking for the high to be put in, right? There it was, put in. Then we're looking for the higher high, and there it is, okay? And right on the indicator, there it is. This is a perfect setup here, because we have, same with this one, because we had negative, positive, negative on the indicator, okay, and you got long. Then we have positive, negative, positive, okay, which on the chart, it was the opposite. So you'd need a break of, I don't think it broke it yet, if you took it from this swing low like this. Oh, yeah, it did. So you would have got short right here, which was on the end of the, basically the end of the trading session on a Friday. I would not go short then because it's Friday, okay? But anyway, we're going to see what happens with this trade this week. You would have had a 50 pip stop. Is it going to go back down here 50 pips? I don't know. I also want to tell you guys that when there's going to be times, okay, let me show you here, that it's going to be pretty much even like this, okay, when you're going to go to look at it. So what you'll do is you'll just put your mouse over the bars on the OSMA, and it'll give you the reading, okay, of the actual bar, if it, what it is. This one is minus 0.000474. Now, if you're going to put it on this one, okay, this one is minus 0.000442. Okay, so this one is less than this one. Okay, that's how you'll find the values and know. I know I didn't show you a good example here, but yeah, that's how that works. Okay, do we have any more questions? If you don't get a break of the trend line immediately, how long would you wait for the break of the trend line to enter a trade before giving up? Well, like I was saying, you really don't want to go past about 20 candles, okay? Because the farther it goes out in time, like here, see, we had a break of it like just in about a few candles. Where's an example where how many candles it took? See, yeah, some, like I said, about 15 or 20 candles. That's about the best way I can answer it. The sooner, the better. If it does it within 3-4 candles, you're ready to go. This chart indicates a spread of 34 points. No, that's 3.4 pips. It's a 3.4 pip deal. It's not open right now, Gerald. Then I have Bob saying, do you ever modify your exit, your hour 4 trades ahead of news releases? No, to be honest with you, no. Doing it on a 4-hour daily. The news, unless it's non-farm payroll, I would think about doing a trade before non-farm payroll. This past one we just had, it was a joke. Like I told you, they did some manipulation there and said that the states got better by half a percentage point, which is not true. But other than that, the market knows already from fear and from crookedness which way the market's going. So, a lot of the time the market will the setup we see and we get into, it's already a reflection of what the news is about to do and about to say, because the world's crooked and, there's traders who have this inside information. There really is. So, no, I don't adjust my stops. I do the setups other than non-farm payroll. I put my stop where it is, and I get in the trade, and I put my take profit. Anyway, so is there any other questions? If not, I think we're going to wrap this up here today. I think I went over it well enough. I hope I did. I think I told you guys, about the high and higher high and low and lower low about 30 times. I hope it's stuck with you guys. And I hope you're all happy now that you can see the divergence before it occurs. Because all these guys out there, in their heart, I think they think they're teaching it properly, but I don't think they are. I they're not at all. And I now told you guys the secret, which is it puts in the high, then you look for the retracement, then you put in the higher high. That is the key part right there of what I just told you. And that's it. That's how you find it before it occurs. Okay, so that's it for, the fatal flaw is coming. Yeah, Dale, it's coming, next week. But anyway, thank you very much, everybody, for joining the webinar today. I hope you enjoyed it, and I hope I taught you some more really good stuff to really, really help you in your trading and make lots of pips. Okay, thanks a lot, guys. We'll see you next week. Take care. Have a great weekend.